Hello, traders. It's 8:01 a.m. Chicago time on Tuesday, the 30th of October, 2018. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, crude's the laggard. Crude falling off, breaking through the lows, the last few lows that we put in this balance zone that we've been in for a few days. Crude is down 1.7%, pushing lows currently. The DAX is also moving lower, down 59 basis points, 65.5 points. And pretty much across the board, we see selling. I mean, the money, the only thing I have on my screen that's positive that I'm monitoring is the U.S. dollar up 20 and a half cents today. The S&P is teetering on unched. It's down 3 ticks on the day. The Russell's down 8 ticks. The Bund is down 6 ticks. And the Dow down 21 points. Very interesting setup for the day. And so this is where we are. The sentiment seems like risk off across the board. Although the S&P is right there at unchanged. So you don't see that often. Overall, the market has received some input from Europe. France's advanced GDP, Q3 GDP came in slightly weaker. Italy's Q3 preliminary GDP came in weaker, 0 versus 0.2%. German state CPI is mixed. And then looking ahead, we just got the Case-Shiller numbers for August. We're looking for consumer confidence at 10 o'clock Eastern, expecting 136 for October. And then we just have 2 ECB speakers today, right at the open, ECB speaker Prate. And then 10:10 Eastern, we get ECB speaker Lautenschlager. So that's where we stand for the day. Let's just jump right into the review. All right. So yesterday, the primary idea, given that we were gapping up, we were teetering on the edge of the prior days or Friday's high at 2692.75. At the time, we were trading around 2695, 2694. And with overnight inventory being mostly long, the expectation was that the market is likely to balance out to the downside before it starts pushing. I was looking for 2713, 2714. The secondary scenario is what played out almost to the dot. We open up, we push. I was looking for a burst through 2700, was looking for 2706 and a quarter stock zone to be tested, 2704.75. Naked point of control will be closed. And then I was looking for it to roll over. And for that scenario, my conservative and very polite target was 2663, the point of control from Friday. Except that the market is neither conservative nor polite these days. We ended up so this top here is at 2706 quarter expected, and we ended up with this piece of action right here. We ended up pushing to 2707, missed it by 3 ticks. We pushed 2707. We closed the naked point of control. We pushed back down to almost the key target below at the point of control from Friday, and then we started to balance out. Looked pretty decent. Looked like it may start to gain some of its buyers back, and then we end up with a bearish engulfing day type pattern with an excess low. Yesterday had a pretty decent excess low. Let me show you that on a market profile chart. Much easier to see there. Here's what it looks like. See those ends? The end period right here. This is the bracket right before, 2 brackets before the close. That's the definition of an excess low. That is a low that is too cheap. We turn around and push right back up. We had pretty good volume on that push up. Very large participants also playing along on that push up, buying about 2,000 contracts on the way up. Not much, but it is a thin market. The small and large lots yesterday, everybody was a seller on this move down. We left quite a few single prints up and down. This is the profile we're looking at right here. Quite a few prints, single prints up and down, and we are trading higher today. So all in all, see how this kind of pushed up pretty strong, really strong volume on the close versus a 20-day average. Very active session yesterday. We ended up covering about 107 points of range, I believe, or 104 points of range yesterday, testing the high and falling through. So yesterday looked to stop the one-time framing down by breaking this high. This was important that when we break this high, we would see a quick pop up, and we did. We did see a quick pop up, but buyers just could not hang on to these prices. Buyers are very, very shy and coy at the moment. We ended up with a wedge here that broke lower, and the selling really accelerated as it started to break through. So that's what we got yesterday. So scenario 2, but with really outrageous range to the downside, 104 points. Wow. We still finished inside of the one volatility sigma yesterday, believe it or not. We still finished where the close was above the 1 sigma limit. So that was also interesting. Here's what we've done in the big picture. So in the big picture, we basically balanced out. We're forming this kind of channel now, and we're just not able to push low enough to entice buyers to step in and hang on. We're still below the MC point of control, 27.27 and a quarter. Let me extend this profile forward. 27.27 and a quarter. We're still below the 200 simple moving average or exponential, it doesn't matter. And we're still trading inside of the sell-off that we had in February. So we're taking back some territory here. We're still trading May's prices at the moment, and overall just not seeing buyers kind of holding their ground. The overnight session had 3 times the mode of volume, 330,000 contracts versus 110,000. Most of the inventory overnight was positive, has just fallen off. Here's what the overnight session looks like on the heat map. On the heat map, you could see that we have some interesting, we have some pretty persistent offer at 26.65 in the overnight session. It started way back here and has been hanging on. This is the full depth up to this point, up to this line here. We have the full depth, and we could see that size persisted all the way through. The market moving up and the offer remaining. That's important for order flow. That's an important way to read order flow, which I'd love to comment on. I'm seeing some negative negative comments about order flow, and I feel like there's some light that needs to be shed there for those people who believe order flow is just some sort of voodoo magic stuff. It is how the market operates. So we look at the overnight session. When we look at the overnight session, which started right here, the extended hour session, we did pretty well. We did pretty well, and then we've been faltering. A lower high, starting to roll over. Offers are coming in heavy relative to the rest of the book. The offers are coming in heavy as we approach the open, and we continue to sell off. It's just looking weaker and weaker, and the market is still allocating away from risk this morning. So the open is likely to be quite noisy, in my opinion. So what are we expecting for today? Wow, it takes me quite a while to do all these colors and stuff, make things easy. So we are right back to about where we closed yesterday. We are pushing the overnight low. We're extending the overnight low. We're right up against it. And we are beneath Friday's range currently. This to me looks like it's an open auction that attempts to push higher. I'm looking for a test up to the 2655 area. I'm looking for an impulse down. Let's mark that impulse down, which then colors the rest of the session. I'm looking for this to start testing the singles. Now the singles from 2627 down. The singles, once we get into the singles, the expectation is we're likely to continue to test through the singles. So as we move down, we're likely to extend those singles down, but ultimately I expect that we would finish inside of today's range. Now, it's tough doing these scenarios in this current market regime because the current market regime really pushes. These guys are somewhat panicky. The trade is somewhat emotional, has a lot of emotional charge to it, and so it's hard to say how far we're likely to move. I mean, I'm projecting here 2655 to about 2610. That's 40 points, not much. We could cover 40 points in about 15, 20 minutes these days. So it's hard to project it, but still we come in with a plan. We know what we're aiming for. We know what we're looking for. We're looking for the impulse, and then we start to trade from that direction. That's what I was looking for yesterday. I was bullish above 2,700 until it reversed, and it wasn't able to retest this high. It puts in a high on a really good rotation, on a large impulse, and then it just isn't able to test it before it takes the mid out. Not very promising. So then we look for the short side, and there were two opportunities off the mid and multiple delta divergence opportunities with order flow yesterday to catch some of that move down. Just classic stuff. The secondary scenario I'm looking for is a very wide open auction that continues to push out, and then I'm looking for it to drop and then impulse up and consolidate and then start pushing towards the middle. Overall, this scenario is a lot less likely than the primary scenario. The tertiary or third scenario is an open test drive lower that happens almost immediately, push up, no interest, impulse down early, and for this scenario we're looking to drop through 2600 and push towards 2585. In this scenario, we're looking for some pretty aggressive selling coming in and continuing the flow to the downside. Okay, scenario 4 is the opposite. Open, test lower, drive up immediately to the single print at 2665, where we run into we'll run into that the resting orders, pull back, and then end up pushing through to the next single print in the 2683. What's the next single print up? The next single print up is 2656, 2666, and that's it. So we would look for, in that scenario, would look for 2683, the next LVN. Now, one thing I'd like you to remember, just as part of the auction process that's really important, is these high volume, low volume nodes. These are so important because they give us, when the market does this, this gives us a very, very clear risk-reward scenario. Essentially, if the market pushes through a low-volume node, think of it as a valley, in between mountains. If it gets through a low-volume node, it is highly likely to push through to the peak price of the next high-volume node, the next peak of the mountain. So that gives us, if we do get long, like it starts to push up and gets through this low-volume node here, it gives us a very clear risk-reward scenario, because then we know that the high probability price is right there, the most traded price of that area, because that is the balance price. And we have a very clear line in the sand to judge our risk from. So these can provide, in my opinion, 5-to-1, 6-to-1 R type scenarios. So it's nice to see this, and it's nice to trade multi-distribution profiles because of this. Once it breaks through the low volume node, we know what to aim for, and we just need to stop being nervous. Well, last word, just a quick word of wisdom. I'll try to keep it to 3 minutes. If you're not comfortable coming in and feeling uncomfortable every day, trading is not for you. So I get messages all the time that this, it's just scary. And one of the prerequisites for my prop traders, for myself, for anybody that trades, is to be absolutely at home with not knowing. This is like sports, the beginning of an important championship game. As much as you've practiced, as much as you believe in your skills, still every player out in that field is going to have a nervous butterfly in their stomach starting that game. And you have to be comfortable with that as a professional. So when we come in, even myself at this point, having traded for almost 18 years, coming into trading, there is a sense of, this is why I meditate. This is why I do the quiet period before the open for about 5 or 10 minutes. I know that at the end of the day, I'm either going to make money or I'm going to control my risk. I'm not going to allow myself to go and blow away a bunch of money when I'm not in alignment with the market. It's not my fault. As long as I follow my plan, it's not my fault that I lose money. Whether I lose or make money is not in my control. It's in the market's control. My job is just to do my job. And so just remember, coming in and feeling nervous is normal. It's normal. You should feel nervous. You care about the outcome, but you also need to be detached from the result. So keep your mind on your plan. If the market doesn't bring you a trade, doesn't deliver a trade for you that you need to execute on based on your plans, don't trade it. Don't trade it. If it's too fast for you, don't trade. If it's too slow for you, don't trade. If it's in the middle of nowhere and you have no reference points, no reference lines, nothing to work off of, don't trade. Eventually, during the day, depending on your style, a trade will show up. It'll make itself available to you. But, being nervous and being kind of scared is okay. It's normal. It's normal. You're going into battle. It's normal. But that cannot drive your plan and emotions in the trade. It cannot drive the trade. How you feel has nothing to do with the market. The market couldn't care less about how you feel. They don't care. You're not special to the market. I've said that for years. Okay. So just remember, your job is to come in, detect where you believe you have an edge, meaning the probability is more likely to work in your favor than against you. Take the trade, and the outcome is 50-50. It's not your business what the outcome is. That's the market's job. Just follow your plan. If you don't have a plan, you can continue to take chances at the market, but you're simply gambling. And eventually you'll find that you need to have a plan. Otherwise, you're never going to be a career trader, which is, I'm guessing, is why you're here. Good luck, everyone.